Mic check. Hello.
Morning.
Hey,
Hey,
what's good?
just hanging out, enjoying the morning.
Nice. Oh, did you send the link? I just saw your message.
Yes, taken care of.
Okay, cool.
Yes.
All good.
Listen to that
Okay.
sweet sound.
Hey, there he is. Been a hot minute. All right, what time is it? 9:50. I should be squeezing my next buy here. Give me a sec. Let me just. So, for the folks who don't know, today is probably going to be my last like real active trading day. My kids getting holiday now, so that means I have to be more present in the daytime. So yeah, so today is my last day actually trading. I'll sneak around every now and then and check the charts, but primarily I'm done for the year. Um, I wanted to short this a little bit higher, maybe up here. So as I just mentioned, I'm long, checking to see if we're done now, and then that should end my day. So, last call of the year. It's got both public and private students. I'm allowed to say students. Let me go mute everyone. There we go. So, it's been a while. I'm assuming you guys may have questions, progress updates you'd like to share, or something. So let's start with that before we jump into the analysis. But I'm pretty sure you're going to be on the fence and shy. So I'm just gonna go ahead and start with the analysis. So for those of you who follow me on Patreon, or let's say support me on Patreon, it's a better word. This is the chart I try to share daily or as needed. So if you see a day passes and there's no update, it means the last comment is still salient or important. Okay. For those of you who haven't seen this chart before for some strange reason, each of these, whatever color this is, pinkish, reddish, is a week of data. And each week, what I try to do is pull your attention to the levels that should be important in making decision, because I strongly believe that you get paid for your decision. You don't get paid for the information you know. You don't get paid for the trade plan that you have. You get paid for the decisions you make. Because a lot of times we know what to do, but we still mess around and do the opposite. So it's a decision you make that gets you paid. So at the start of each week, or close to the end of the week, or as soon as I get the chance to, I post pink box around the last week's range, high, low, open. That's it. I try to put this in the format of previous week's high, previous week's low, previous week's open, and then the current weekly open. So by doing that, my expectation is that you should be able to see where we're opening in relation to the last range. And if you're bullish, you can see where the previous weekly high is for target. And if you're bearish, you can see where the previous weekly low is for target. And if it's one of those days where you have an animated Friday and we have Friday taking significant liquidity or Friday just expanding, you have a reference point for where Friday's high or low is, depending on the environment. And then you can use that to frame what you want to see, etc. Okay, so my long is doing pretty well. So allow me to manage because I'm not a crazy person. There we go. Right. Then we'll jump into the lower time frames in a second because this looks like one of those close above, pull back, and then rally again type of setups. We'll get to that in a second. So, again, if you haven't seen Patreon for some strange reason, the last thing I posted after Wednesday, FOMC day, was that the FOMC positioning at previous weekly high. So we have old weekly highs here, and then two untapped daily highs. So while narrative says the weekly high should be swept, for setups, you don't want anything against your position. So you can't go short with untapped buy side. That's just my opinion. So I had this marked, taken on Friday. So you're now expecting Friday to be the stop hunt. So not much runs above Friday should be necessary. Monday opens. You typically don't want Monday high of the week. If it breaks down here, we get the start of the expansion, and that's fine. Anyway, we swept the high, previous weekly high again. So right here, the expectation is that based on whatever data came out on Wednesday, large positions are now being built. So if we have large positions being built at the previous weekly high or previous pool of buy side liquidity, it's going to be either large shorts coming on or large longs coming in. Simple. So because we just had buy side liquidity taken, the logical expectation would be that shorts are coming in. But it's that time of the year where there's a whole lot of funds, closing for the year and all that good stuff. So lower prices. But since what's that now? What's that word? Participation is going to be minimal. You expect the run lower to be messy or the run lower to be inefficient because lack of participation, lack of volume, thin, lots of rebalance. So chop, 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 chop. So the last thing I posted was that slow console lower is the expectation. So movement lower, but it's not going to be like a clear expansion. It's going to be like this. Bam, 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 consolidating, chop, chop. So that's that. The chart I started the call with is pretty much my bias indicator and M16 imbalances. So every day, this is basically not for public consumption anyway. This is what gives me my bias if I want a bias to follow. So this says go long, I look for sell side liquidity and I go long. This says go short, I look for buy side liquidity and I go short. That's it. So I mentioned I wanted to sell higher because, again, clear bearish bias, but we don't buy or sell anywhere. So I'm in a long now, and I told you when I was getting in that long, somewhere down here, and we're looking for it to go higher. So that's it. That's simply stupid. So now, that's my opening statements. So see what's going on in the chat. Voodoo is a short. Oh, you bought with me. There we go. There we go. There we go. Easy 50 points on that push. Or maybe at least 85, 45.
I have this line on my chart.
I have a lot of lines on my charts.
I got more lines. Maybe I haven't seen all your lines.
Don't worry. I owe you guys a video that Sauce has been taking jabs at me for. You'll probably get it this weekend for sure. Yeah, for sure. So yeah, let's go to lower time frame only, and I'll kind of tidy up, and we can go into having conversations, provided you guys brought questions. So I'll go standard M5, or better yet, indicator specifically for this. What's it called again? V1 DST. So I'll load that on. I'm partial and break even. There's no need to manage my trade anymore. So let me add V1 DST here. There we go. Should be pretty straightforward. Big group here, lots of old and new faces. Indeed. I've done training for the year as well. Yeah, December is generally less liquid. So yeah. So this is the indicator that, or the template I shared on Patreon. This shouldn't be UTC 6, it should be UTC 5. There we go. So for simplicity purposes, most of this can be regarded as an overnight session for simplicity. If you're just trying to have a simplistic approach to trading, we all know that there are some things that are just always important. The first thing is allowing a range to be created so you can find its high, low, open, EQ, whatever. So this is a simplistic approach, kind of like overnight session where you look at 4 to 8 or 4 to 8:15, if you know. Just find that range, find its high, low, and you can allow for your studies to show you how price is delivered around that range in the most obvious ways possible. And then you use that to create a decision tree. I'm going to do something here, I'm going to do something here, and this is where I do nothing. So that's what this is. It's a simplistic approach. Here's the range. Bias says bearish. Well, you wouldn't have known that, but the bias says bearish. And we know the best sell setups either happen on run on buy side or premium. So this would tell you automatically without my bias that look for a premium run. Now I'm going to stick my foot into somebody else's pool here because I've been playing around with volume profiles. And if you have as well, then fixed range volume profiles at the moment seem to offer a whole lot of confluence to us technical traders. So what I do is I just use a regular tool and you can put it on any fixed range. For the sake of this conversation, I'm going to slap it on here to here. There we go. And then this would have been the profile. Now I've color coded mines to look like this, but essentially, yeah. These would be your quote unquote key levels, and then you use those to make decisions. So I'm not going to go into everything I do with the volume profile, kill the conversation. But yeah, it's something that offers a whole lot of confluence. Simplistic approach. The white line means POC. You can find all this information on YouTube. These are not my ideas. And I think thin or small bars represent imbalances. So to not give away anything, one of the best things that you can do is if you have a range and you slap the volume profile on and you see very small bars here or smaller bars in relation to everything else, if this means there's an imbalance here in that range between this high and that low, there's an imbalance at these prices. And then you see things like this happen. Light bulb. Oh, these are inefficiencies. These should be rebalances. These should be rebalanced, sorry. And if you get displacement, no rebalance, liquidity taken, you get a breakaway gap. So now when the range is finished and you have imbalance at EQ, what are the chances that you are going to see a run on the high if we're going low? Not a lot of chances. So focus on imbalance. Here. Now I'm going to play devil's advocate a little bit. Go to M1 chart and say if we, so let's say we start trading at 8:20 just for, or let's say 8 o'clock for the sake of simplicity. What if we start trading at 8 o'clock and I have the previous hourly range, which is here? If the indicator uses fixed ranges, can't I just slap it on the previous hourly range like that and then get a read of what to expect. As you can see, no really, really small candles here. The distribution is normal. If you know what that means. This is what it should look like. If everything is perfectly fine in a range, when you run the volume profile on it, it should look like this. Bell curve, normal distribution. Yeah, the white line should be roughly around EQ between here. And that's when you know there is no clear bias based on this range. So if you want to, I don't know, pull it back, let's go just for the sake of conversation. So I leave you with something I can actually pay attention to. This is the previous 2 hours, right? Because the last hour didn't offer much. So you're looking more to the left. This now offers a complete different story because this is no longer as normal as you might think. This is now top heavy. So bullish. Million questions are going to arise, but yeah, pretty much. And then if for some strange reason you were trading all the way down here, then again, same thing. Top heavy. So look for longs. Somebody's going to be silly, or not silly, curious enough to say, so where would I want to buy? And I'm going to say, do you see small candles in here? And you're going to say yes. I'm going to say where? You're going to say right here. I'm going to say, do you see an imbalance right there? You're going to say yes. And I'm going to say, why don't you mark the imbalance? I don't know where to start the imbalance from because this is not clear enough. Look for the smallest bars in here. And then you just run that across. Allow that to do the work for you. It says this is the imbalance. Okay, I want it to rebalance CSD and I participate. What does that mean? Close below, print the reversal fractal. Amen. Again, where's the reversal fractal? Some strange reason. You have a high, low, lower low. ICD says that is called a dot, dot, dot. So you do the dot, 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 and then you pull that over dot, 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 and then you wait for this, and then, yeah, amen. But yeah, that's enough of that conversation. So basically what I'm saying is a simplistic approach can yield enough fruit for you to go crazy. All you need is a range and a bias and a time of day to start that bias, and it gets real simple. So again, my indicator says I should be bearish today. My indicator is only 93% accurate though, so it can be wrong. And yeah, bearish premium, amen. So let the questions begin. We're here for a good time, not a long time. Volume profile. Oh, if you're late to the call, I came across volume profile maybe about 3 months ago, and I saw somebody using it, and his interpretation of it, if I may be so bold, simply said that there were gaps in his algorithmic understanding. That's all. And I was like, oh, but I know what that means. So I can put that to algorithmic logic and then get a little bit of oomph out of it. And I tried, and it showed itself to be very accurate. So I'm like, this is not my style of trading, but the confluence is, you can't debate it. You can't argue with the fact that I made an assumption, tested it, and it kept being right. Only ego would tell me not to include that in my system, so to speak. So that's what I did. You can time speed. How can we time ranges to know when to step aside and let the pigs play first? That's a curious question. Instinctively, my response is I was taught by my previous mentor to be the second idiot in, or don't be the first idiot in. So what that means is I don't chase breakouts. So my worst trading days are days that break out historically. simply because I don't sell a breakout of a low unless there's a fractal that I know to be a continuation fractal, and I don't buy a breakout of a high unless there is a clear fractal that says, right. However, again, because of the win rate of my bias indicator, I'll play around with stuff. But bottom line is this. This is another, not the only, just another simple way of finding good levels to trade from. And then, yeah, you can use submission range. You can use this. There's so many things that you can use. And if you have multiple screens, the confluence will show itself. But the more I rant on about this conversation, the more I realize that there's a lot of stuff that I could add here that are not supposed to be had or spoken about yet. So, questions. Bears buy, no, bears don't buy. Bulls buy low, bears sell high, pigs be in the middle. So try to not participate too much in the middle. That's my response to the question I was just asked. Do you reference prior VP? So personally, I don't, but there is at least one person or two persons that have demonstrated that they do, and they're finding success with it. I am a scalper. I do that very well. So I rarely go beyond the confines of 2 to 3 hours in the market and then just done. I don't. It's why you won't. It's rare when you catch me trading sessions outside of New York, that very strict window of time. And yeah, I don't have that. That's not my edge. How do you use time for precision entries? Easy. Studies have proven that certain functions happen on time. Simple. That's the whole point of these visual indicators. So for a second, right? Somebody give me a random pair. A pair that, just give me a random pair. Let's do this on a random pair.
GU.
Is O2. Gold. Somebody said GU. I'll use GU simply because I've had the worst track record with GU. So that means if I can show consistency with not my model, but this model on GU, then the model will speak for itself. I shouldn't have any previous drawings on there, but let me just check. Nope. All right, cool. So
Redemption.
no, I thought about it. I thought about when I go through my numbers, go to GU and bring it to 0 because it's still negative.
You can finally get revenge. You should go back.
No, not doing that.
Yeah, I hear him whispering about you.
Here's a simple approach, right? Just imagine for a second, right? That you don't know how to trade. You don't know anything at all about trading. But you know someone with an edge. You know somebody with an edge that seems to be working. You don't know if it's a lie. You don't know if it's whatever. You just know that this person has demonstrated an edge or an edge with a particular process. Now, you cannot copy his edge, right? You cannot copy that edge, but you can copy the processes and the rules that they use to find setups. So, first thing you need to be aware of is, since this is not your process, if you go in trying to tweak it before you understand it, you are going to fail. Simple. If you go in and you stop following the process because you are now trading off the top of your head, you are going to fail. If you go in and anything outside of the process makes a decision for you, long term, you are going to fail. Full stop. This goes for any strategy at all. Okay. So let's say this silly person says, in order to be good at trading, you need to learn to identify ranges. The range you identify will either be where the market will stay or where it will leave from. Simple. Okay. So if it's going to stay inside the range, you have understanding that says, if this is the range and we're not going to leave, I should find 50% of the range, buy below it, sell above it, blah, 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 blah. Cool. You already have that information. So when you have this range now, the process is going to say to you, the range starts at this time and the range ends at this time, which means if you get up early and you decide that, wow, breeze is blowing from the left today, so I should start early, or you find some silly reason or excuse that you tell yourself to trade early. No process-driven reason, just as simple, I'm here now, so why not? You've already broken the first rule of trading that process. You are now justifying that I know patterns that work, and this is one of them, so why not? So in this case, let's say you bought here because you want the high, because you wouldn't have known where EQ is. Clearly, the range is not done, so you can't say you exit here. You want the high, so you're buying, you're failing. So by that time, you're pretty close to the start of the day now, when you actually should be trading. So you leave, then the market rallies. Suddenly, the entire process that you should be following is now irrelevant. And what's relevant is, I've been trying to buy this all day. It's finally rallying. So now I'm going to buy a retracement. So you either buy this or you buy it here and you get stopped. And then it rallies. And then you remember all those memes that you see on the internet about the market stopping you out just before it goes. And then you feel comfortable being a part of that crowd. Oh, I'm not the only person this happens to. It happens to everybody. Everybody buys and then they get stopped out and it runs. Really? You didn't just mess up the entire process? Waiting for time to be done. Range higher, range low, range EQ clear to you. The market gets here, CSD, but it falls too quickly for you to sell. So you watch the target. It hits there. You buy here. It runs up. I don't know. I feel like that's crazy simple. Oh, this is GU, so the ranges are not very big. I can't tell you that. What is this? 660, so 760. I can't tell you that 10 points is good, but I've seen people take 10 points forex trade. So, yeah. Touch on CSD validation on key level and how to shift on for the fake setups. Should be happening. Okay, so CSD by definition means a change in the state of delivery. So instinctively for me, if the state of a delivery is going to change, the delivery objective must be met. So if we start off with a simple idea, and these are generic ideas that you can take anywhere, right? If you start off with the fact that we have a range and the market is bullish, the state of delivery is going to take the market from anywhere below that 50% level to 50% or higher. Simple. So let's say the market is trading higher, but you want to be bearish. The first thing you're going to think about is, can I short EQ? That's the first thing you think about. But because that range is going to be behind you, you're going to have the luxury of being able to see all of that and make a decision. Do I have relevant points that I can use from mile markers to say, If we close beyond this, it's likely to do here. If it fails to do this, then this is likely the scenario. Or if you're a time trader, if at this time, this process or function is not yet done, then I should wait. Or if it's this time and then this process or function is done, then I should execute. Okay? This is the easiest reversal fractal known to me, and I don't think anybody can debate that. It's easy because of its because of the nature of the confirmation it provides. That's it. Because of the nature of how confirmations are gotten from this fractal, it's easy to trade. So if you have a range and the low is not taken, let's put this here for simplicity. If you have a range and this low is not taken and you try to buy a pullback off the low, then you're asking to get stopped out. So when this stops you out below the range or at the range, that's not a I can't trade, I want to quit. No, it's a you're trying to move the market with your mind and with your position size, and that that doesn't work. But then the stop run happens, and this is where people mess up because I have to screen the chart up. Sorry, my bad. Just remember that this is not a part of the actual chart, and it's a drawing. I have to do this, but I can't do that either. Anyway, so this happens, and then if you are adamant that you are right, then you're going to be stopped out and then buying. Depending on how far down this goes, you could literally stop trading down here, and then this happens. Then you try to chase up here, and it starts going, and then you go break even because you don't want to compound that loss, and then that takes you out. So all of that mental capital is wasted, and then your analysis plays out, but you make zero money because what? You can't control yourself. You don't know how to start confirmation. So for me, I like this fractal because it combines two understandings: ICT breaker logic and a FVG theory that I kind of figured out in my own right before ICT introduced it. So let's say this is an ICT breaker somewhere in here, an up candle. I look for this leg, and then FVG is in here, and then if they break above, I guess classic ICT inversion FVGs, and then all that good stuff. But I like when this leg, which is the leg that swept liquidity, closes above here. When that happens, then this becomes easy to trade. This becomes stupid simple. Still not proficient at trading view. This becomes stupid simple to trade. But again, like I said, if you start jumping the gun here because you have your range and you're on time and you just buying, you get stopped out first. And I can say this because I've had experiences like that before. I have gotten stopped out before the market rally. I have chased positions in here and all that. So stupid simple. Why I say I like this is I look at this in terms of steps. First step is not this. The first step is the run below liquidity pool. Liquidity pool is taken, something that changes the market structure. FVG here, displacement here, close above that high. It's that stupid simple. So if you go to the market and you see a range, it could be an hourly low, it could be a daily low or whatever. The moment it gets run, you can start stalking that fractal. Now, to make that easier, because we like getting interest down here, I came up with a way that I can discern when I can be a degen. And that's when the expansion here has failed. So if the market is expanding through a pool of liquidity and the expansion is failing, then I feel like I can get away with trading here. Difference is I'm not going to size in aggressively here because I know that the chances of me being wrong are lower than the chances of me being right are lower here than they are here. So that's it. So all that into consideration now. If we have this clear, simple range You know that markets, you start trading somewhere inside here. It could be 7 o'clock for you. It doesn't matter. Because 7 o'clock is when the New York session actually starts. You could literally start your trading here. Okay. If you start trading here, you have to be aware that there's still some time left for something to happen. So there are going to be instances like this where the EQ of this range at 7 o'clock would have been here. Like, this is just a little bit of common sense, really. At 7 o'clock, that's the EQ of the range. Okay. So if you're looking for something to participate with here, logically, it's going to be a run below here. And then the market goes higher. And then, of course, you have to have those points where it should close above and then you come back to and all that good stuff. So now using the fractal over here, if I'm thinking this is going to be a reversal and then 7 o'clock starts to run lower, I need to find my FEGs here. The FEGs here are what I'm going to use for it to get above, then close above this high and then come back and then run. And then the target. So simply, off the top of my head, no preparation, if we have 7 o'clock sweeping here and you're looking for something in here, there are clear FEGs. When this high gets taken, you can say, okay, there's going to be a bullish breaker inside here, and you want to see the market retrace and then run to here or higher. What happens if the market hits here first or gets into that premium level first before it comes back down? It means this state of delivery should be a rebalance to imbalances, and that's where you look for your setups. You don't want lows swept if you're bullish, and lows have already been swept with time. So look for the imbalances. You're not looking for a reversal here, you're looking for retracement. So two completely different views on how to trade this same market. And we can probably look at another day to kind of put the idea into perspective, because it's not a set in stone approach. It's more of understanding what's happening here so you don't jump the gun. 7 o'clock open is when the New York session starts. Okay. At New York open, the market will look back. Simple. It is going to look back. What's it going to find? You already know. Then from there, it's just all about key levels and what decisions you make at those key levels. It's that simple. Look at the day before. I'm just going to put 7 o'clock on. There's 7 o'clock, right? So same idea. There's your range. At 7 o'clock, you're looking for something. I don't have a bias here to share. I don't play around with this. But we would know we're opening in premium of the range. Low or high and low is there. We open, we push above. So let me put a line there as well on that high. Now, what information would this instinctively provide to us? We have a down candle right before an expansion that swept a high. In every textbook, not literally, figuratively, in every school of thought, then that's a high probability order block. That has to be a high probability order block because it's an expansion that broke liquidity. What does that mean? If it's a high probability order block, it should stay in the market, which means if it gets broken, so does the narrative. The narrative of higher prices is broken. And then it becomes a breaker. Anyway, so here's that order block at 7 o'clock, runs, liquidity is swept, market comes back down. You take a buy here because why not? There's your long. Stops below wherever the low of this candle is, and you're looking for higher prices. Higher prices. Again, I don't know how to frame the best targets for this guy, but I'm going to show you two ways. If that's the high of the range and this is the low, and this is the low before the lowest low, because that's the run on liquidity. It means if I pull the top of this to align this line to the top, I have one deviation of the real range. There we go. This is no secret information. This is just a process. This is not an edge at all. It just looks cool because it plays out. It's a simple process to get you from having a million different moving parts when you're trading. The whole point of this is to make money, right? So why would you want to make more calculations than a computer?
Magic.
In a couple of seconds, just so you make money. That doesn't make any sense. I keep saying this to a lot of people. The next trading day, the next time I trade, I know what I'm going to do, and I haven't seen the markets yet. It doesn't mean I'm anything but human. It just means that I know how I'm going to make decisions. I'm going to open my computer, and I'm going to look at what color is being displayed here. That's it. If the color here says red, I'm bearish. If there's a bearish narrative in the market, I'm simply going to look for a setup that's bearish. I'm going to look for a high that needs to be run, premium that needs to be traded to, something that needs to be something, whatever. And I'm looking for a setup in line. So I'm not in that short. Like I said, I didn't get the level I wanted to sell from. So my bias is right, but there's no setup for me to sell. I still made 40 points on a long. Well, I made a couple of longs, but yeah, I made enough to it doesn't bother me. My higher time frame says I should be looking for low. So if I have higher time frame saying low, medium time frame saying low, again, my data says those are days when I don't need a perfect entry. I can get in with narrative, and then the guys I trade with a lot can tell you. Once every full moon, you see me say I'm taking a trade that's narrative over precision here. Simple. But let's see what's in the chat. Can I use entry pattern for exit? Meaning no settings, targets, but exit. Yeah, you can. The easiest exit pattern is timed open rejection. So this is what it means. If you have an open price, let's say we're bullish, and let's use 7 o'clock since we've been talking about 7 o'clock. Let's say you're bullish and you're in a long since London or yesterday because there's a bullish undertone in the market, and then 7 o'clock opens, and then 7 o'clock open is not allowing price through. So the first candle at 7 o'clock open is a down candle, and then the second candle will come up, we wick, and then we close lower. That's not bullish. To me, that's not bullish. So it is instinctively saying, make a decision here. Full stop. The decision is either going to be close, partials, break even. I have to make a decision. It's that stupid simple. And then the more you do that, the less you care about, oh, this, I wasn't right here. Oh, this wasn't. No. That simple process saves you so much mental capital. You can reinvest it in other setups. That's it. But yeah, wick rejections is probably one of the things that I think everybody knows, because over the years it's been passed down as lack of commitment. And there's a low and we can't close below it, so it's not heavy, that type of thing. So wick rejection from somewhere, air quotes, significant, should be the first exit entry fractal. But then again, time can allow wick rejections to mean pullbacks. So that's why you have to play around with what works for you and your psychology, or you run into trouble. As long as the horizons are level, TVM. Yeah. Going back to Zoom process, we know accumulation happens where it takes the right liquidity pool and should have a stop on before going to level. The question is how to how to anticipate when it's just accumulate and reverse or accumulate stop on. That's a very good question. Who's that? Oh, yeah. Very good question. Very good question. So this is let me pause for a second. This is my response to that. When a process starts, okay, I don't really do much annotation on this because I like to keep the chart simple so that anybody who replicates it can follow without all of that. All right. So there's an eye icon somewhere here that allows me to hide the price action. There we go. And hide the indicator. All right. So this is my belief. This is my fundamental belief and the reason why algorithmic trading will always be the path I choose versus something else. This is the start of the day, right? Let's have a conversation. If this is the start of the trading day, the trading hour, trading session, month, year, whatever, if a decision is going to be made right here to hunt buy-side liquidity, my question to you is that buy-side liquidity on the right or left of this line? Simple. That's a simple question.
Left.
Left. Okay. Now, you see how that just makes sense to everybody? I can't start to hunt liquidity here and it's over here. But at the same time, somebody, and you know who you are, is going to see that and then think this is the buy-side liquidity and try to sell that. Let that simmer for a couple minutes, or a couple seconds, so you can realize
that happens to me all the time.
That's what you do a lot of times.
Not gonna lie.
You see how it just makes a lot of sense when you look at it like that? It's the same question. It's the same thing for me. So if I'm seeing a run on liquidity anywhere and I'm trying to figure out, is this where the reversal should be, or this where they're accumulating resting liquidity, or this is where they can reverse from, I'm checking that. So let's play devil advocate and put that line right there. What if this is the buy-side liquidity? What if this is the buy-side liquidity and the delivery that we're stalking starts here and then the market goes up and then it comes down? The simple fact that it broke that red line will make a vast majority of persons bearish, which means somebody is selling this as a retracement into, what's it called again? Fib here to here, OTE. Somebody's selling an OTE here, and nobody's selling OTE here to target his open price. Everybody's selling OTE here to target ding, 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 ding. Open price rejection. Remember, we just talked about how you can exit a position. Open price rejection here says get out. Get out. And that's how you avoid getting a stop.
Hold on, just real quick. So are you saying in instances where, as you said, you start the delivery, let's say an hour start, and you've identified your liquidity on the left, no matter what, do not play the liquidity, quote unquote, not funds on the right, even if you're waiting for quote unquote CSV or confirmation?
Dan, I don't know what's happening on your end, but I could barely hear what you're saying. Yeah. So if you can, Dan, just type me a message in the chat or DM or in the group and we can talk about it later. But essentially, this is what I'm saying, right? Most times we'll see this setup and we'll see this high. There we go. Then we'll see the market come up here. We'll do this. Okay. And I have up candle, up candle, up candle. And then the first CSD here, is going to come back down, tag that high, and pull back. It's going to be a candle with a wick. Most times, when it's heavy, and a big close. But most times you're gonna get a wick, then it closes higher, and then you're like, oops, I thought it wasn't going to give me an entry. This is my entry. And it goes up to make the wick. Then it crashes like that. You can't figure out what's going on. Or you can see that this is the buy side liquidity. This high gets broken. You're trying to buy in here, which is fine, but there is no breakout strategy. There's no FEGs here staying open. There's no down candle before that push that's been respected. But you simply say, I see you buy side liquidity, narrative over precision. I'm okay with the market going below here, and you buy. You get stopped. Oops, I was too early. You fib, you OTE, you justify everything in here for another buy. Get stopped out. This happens. Again, when it's below here, everybody's bearish. So you do the same thing. You sell OT again. You sell OTE again. In big picture, what's happening is because your order block gets created inside here. But this was an order block. And then you can't understand why this order block did this and then they swept it again. So it should be a breaker and I should be selling. This is what changes everything. This is the draw on liquidity. I keep it simple by taking this level from the daily chart. My liquidity levels, unless I'm scalping, always daily chart. Weekly chart sometimes when I'm trying to share a bias because I know that I might say bullish for an hourly high and then somebody's holding for longer and then get messed up. So I share this so that the narrative is not lost on anybody. You can see that this is the higher time frame or long-term perspective. When this starts printing tomorrow morning, you know, is this printing in line with the narrative or not? And again, that helps you to make informed decisions. So the person who asks, how do you know if it's accumulate, etc., etc.? If it's the liquidity, remember, order blocks don't accumulate air. It must be accumulating liquidity. So if I'm expecting a significant bearish order block to print it here.
So Kish.
Hola.
So Kish, basically, if we accumulate those liquidity at that blue line, like for example, like this, and this is the accumulation, and then this happens. Let's just like call this as a failed narrative.
Mm-hmm.
Is that right? Because I was
okay. I think I see your question.
Yeah.
9 times out of 10, if you're going to have a multiple run on a high, it won't spend a whole lot of time doing this. It will be more like this. And many times, in my opinion, it's when there's like a 2 or 3 day rally. Like it takes 2 or 3 days. So let's say we have a Monday. I like using Monday because in my opinion, Monday really creates a higher low of the week. So if I trade with the expectation that Monday's higher low, or let's say Monday's high is going to get taken before we go lower, or Monday's low is going to get taken before we go higher, it generally keeps me away from mess. And again, depending on where you start your analysis from, should be easy. So let's say Monday's high is here. What's going on? I think something feels off. Oh, PC feels warm. Am I lagging?
You're having some static. It just
Yeah.
came in like a minute ago.
Yeah, PC overheating. That's it. I could tell stuff were loading slowly. So, if it continues, we'll just continue this call another time. But yeah, let's use a daily chart to represent this, right? I started posting these charts somewhere. It's getting, I know, somewhere on left. Yeah, it's pretty bad. Where's my iPad?
Have you tried blowing
We're
on
probably
it?
going to have to end the call here for the sake of PC, folks. I'm just going to
You need to get a streamer machine, like a big beast.
Smelling, smelling a full margin trade in the afternoon for a new iMac.
All right, guys. So yeah, it's lagging, so I might have to end here. Give it some time, and maybe we resume the PM session. But since I don't know how well you are hearing me, I posted in the what's it called again? In the chat. I'm trying to figure out how to. And is not allowing me to be great.
Yeah, everybody sounds staticky. So good day, all.
They are on to us.
Yeah, it's very static. Separate clothing, or did they call them out by name or the same?